trend is a trend is a trend. Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of July 23rd, 2018. Well, the S&P 500 has been following a pretty predictable pattern. We've been talking about it for weeks, months even. It started back in late March, and you can see after the big correction earlier this year, we had a higher high, higher low, higher high, higher low, higher high. We saw this rolling over and predicted a pullback back down to support either at the cloud or the 200. It found it at the cloud, and it went on to a new high. And you can see the latest couple price bars are indicating a rollover now, and we probably will expect to see this pull back at least to the cloud, maybe a little bit deeper, before continuing on. That's the current pattern until it gets broken. And the other indexes are following it. So this is the S&P 500, and the other ones are following it pretty closely as well. Let's take a look at those. Here's the Dow Jones Industrial Index. What's interesting is it did not go make a new high yet, and it's rolling over. And so that may be a bit of a leading indicator, but it has rolled over a little bit. We should expect it to pull back at least to support. In this case, the support level is going to, for the cloud and the 200-day moving average, are going to coincide. Looks like right around 24,585. Let's look at the NASDAQ. And here it is, the NASDAQ composite, and the same high, higher low, high, higher low, new high, all-time new high on the NASDAQ, but the last couple days rolling over, probably going to pull back at least to the cloud, maybe a little bit deeper, find support at the prior low. Now, the one thing that could change things would be, we've got a lot of information coming into the market through this week. Here's the earnings calendar. Yahoo Earnings Calendar is a great resource. So this week we have got a phenomenal number of companies reporting earnings, a total of 781 companies reporting earnings throughout this week. So that definitely could be new information, and we'll have to see how the market responds. But for now, what it looks like on all of these is we're in an uptrend and we're ready to pull back just a little bit as an ongoing sequence. Let's go back to the S&P 500. Ongoing uptrend, but pullback, with higher highs, higher lows, higher highs, higher lows. Pull back here a little bit. If earnings are great, maybe this pattern will be interrupted. It goes on to new highs. If they're kind of in line, probably pulling back here. And if there's some disappointment, then we could accelerate a down move. So as always, we just got to stay tuned to the reality of what's going on in the market. Pay attention to the existing pattern, and then look for signs that something new is happening. And we're trading accordingly and watching closely, trading individual trades, some that are correlated to the indexes and some that clearly are not. So according to the technical analysis, the pattern we should expect, again, if there's no surprises in the market, a gradual pullback on the S&P 500 would take us down somewhere around the 27, low 30s, 2733 level. If new information comes in, it could accelerate. If it breaks this 200 down here at, we'll call it 2670-ish, then that could be the beginning of a larger move down. If there's really great news and it reverses quickly and puts in new highs, we're probably going to go put in all-time highs. So that's the key, watching the reality and then looking for changes in the current pattern. And the current pattern is a gradual uptrend. If it accelerates up, probably new highs. If it accelerates down, new lows. We'll be watching carefully and trading accordingly. You may be wanting more precise. Is it going up or down? Sorry, that's just not possible. But we have signs that we can watch for that will tell us whether it's going to then go make new lows or make new highs, and that's what we're going to key off of in our trading. So that's the indexes for the week at following a fairly predictable, very low volatility pattern. If something different happens, we'll be able to see it happening and respond. Let's go ahead and take a look at gold and oil before we wrap up. So here's gold. This is the daily gold futures contract. Clearly been in a downtrend. It's reversing up, but there have been several of these reversals on the way down, all lower lows, lower highs, lower lows, lower highs. So it's reversing up. Is this finally a bottom in this move down on gold? Well, we'll have to watch the pattern and see. If we change patterns and we get a high, higher, low, new high, then could be. At some point, we do expect gold to begin to rally, but clearly the current trend is down. And here are the crude oil futures on a daily chart, clearly in an uptrend, getting more volatile for sure. It's been in an uptrend for a year, and the last pullback was pretty dramatic, and then a dramatic move up, and then a dramatic pullback, found support right at the Ichimoku cloud. Likelihood onto new highs up to 75 or beyond on oil, but we'll continue to watch that and provide updates. Well, that's it. We don't have a crystal ball. It's never perfect, but these patterns over time do have high probabilities until new information enters, and of course we trade the reality. So keep your powder dry, trade very, very carefully, always use risk control, keep the winners big, the losers small, and we will give an update. If something dramatic happens midweek, we'll send out a midweek update, but otherwise we'll continue to watch and provide these weekly updates. All right, thanks. Bye.